Yes, good morning, San Diego. Good to have you here. Got a great show lined up for you. We're diving into politics. We're diving into the real estate market, the financial market. Also, something that's so important, what's going on with your credit scores and identity theft. Whole bunch of stuff. Got to cover it quickly. My goal is to educate, empower, and engage. Let's get another episode of The American Dream started right now. I go to battle for you every day to combat the nonsense in the mainstream media. They're more interested in sound bites and sensationalism. I'm interested in the truth and being your consumer advocate. My ultimate goal is to help you win in any marketplace, and I'm bringing an edge in the real estate and financial game. My name is Craig Sewing, and this is The American Dream. Hey, good morning, San Diego. Good to have you here again on another episode of The American Dream. Got a great show lined up for you. Of course, this comes on the heels of our radio show, which is every day at 6 p.m. on 1170 AM KCBQ, The Craig Sewing Show. Of course, we're The American Dream here. All the content's pretty similar. My goal with every show is to educate, empower, and engage. We've got a great show lined up for you. Great guests. Matt Rinkey, brilliant financial advisor, going to be in here, helping you to fight off those bears. I just saw the movie The Revenant. There is a massive bear attack on Leonardo DiCaprio, and I don't want to see that happen on your 401k plan with what's happening with our market being off to the worst start ever. Matt's going to help us to stave off any of that stuff. Also, we are going to be bringing in Kyle Whissel, who is the #1 realtor per the Wall Street Journal. This guy is absolutely crushing it. He's an icon in the space and overall one of the coolest guys in the business. Going to come in here, talk a little bit about East County, things happening in real estate. Then Aran Sinai, the credit guy. This is the guy that can help you achieve maximum credit scores, which is always good. Everybody watching this show right now has a reason to have higher scores. It's good for you. But also protecting from identity theft. And this is a good reminder that if you ever have any questions or you want to comment on the show, couldn't it be easier? You go to craigsewing.com, my first and last name. There is a contact form and it comes directly to me. Easy enough. Speaking of which, we got an email over the weekend from a gentleman who was asking me my political opinion. Now, this is not a political show. I do certainly have opinions. You're going to hear him a lot more on the Craig Sewing radio show. But he was asking me what I thought of Bloomberg entering the presidential race. And you know what? This is really shaping up to be one of the more fascinating presidential races in U.S. history. We have a reality TV star, real estate mogul, Donald Trump. We have a scandal going on with what's going on with Hillary Clinton. Bernie Sanders is a socialist, and all these other candidates. So a mixed bag of goodies, and then you're going to throw in a guy who was once a Democrat, once a Republican, now an independent. And you want to know my thoughts on it. You know, look, I think this status quo of Washington is a major, major problem. When you have a congressional approval rating of 14%, it's not good. When you can't have objective conversations and when you can't be honest about things for fear of being politically incorrect, you have a problem. When you can't discuss your borders, the war on terror, or gender issues or race issues, you have a problem. So I think as a country, we're all very frustrated. And a guy like Donald Trump has come in there and he's rocked the status quo. Now, whether you like the guy or not, he's got more people engaged than ever before. The question is, do you think that guy should be president? Now, that's an interesting question in itself. So you get a guy like Bloomberg who wants to come in, another billionaire that's going to challenge the left, which is seeing Hillary Clinton. She's dropping further than stock prices to start off the year. I mean, are we really ready for a socialist in Bernie Sanders? And then, of course, on the other side of the equation, you have Donald Trump. He's a very polarizing guy. And then you have some other candidates there as well. Ted Cruz, next in line, is a hardcore conservative. So now you got this independent coming up the middle. Now, there's arguments being made. Is this good for Republicans or Democrats? Because the odds of him winning are very slim. But can he pull enough votes from the other parties that do empower somebody else? And that's the question people are asking. But here's what I think. I mean, this is just me being neutral, objective with you as much as I possibly can. I think that anytime you can get a new candidate representing an independent, I don't have a problem with it. I think when you have the status quo rocked this hard, it gives an opportunity for the American people to be engaged and decide what direction do they want this country to go. And we have an $18 trillion debt. We're facing a war on terror. I call it the World War III. It's a dangerous place out there, not only economically, but geopolitically and in this war. So getting another voice, getting someone else who could fill that vacuum that's been created, I think it can be a good thing. I don't know enough about Michael Bloomberg's stance to say whether I would vote for him or not. But I think options are a good thing. That's what a democracy is, so it will be very interesting. It is a fascinating race, and if there's any takeaway from this show, I hope you're engaged. We have a show called The American Dream. That means we get to participate in the outcome of our leadership. How do you do that? Obviously, you vote, but you also engage. You have conversations, and we'll certainly be covering this stuff on this show, and you can get a lot more of it on my radio show. We have a lot more time to talk about it. We take the gloves off at KCBQ, 1170 a.m. All right, enough about that. Let's switch gears now. Let's talk about the financial market. Joining us in studio, our first guest with our market report, our good friend, Matt Rinkey. All right, joining us in studio with Illumination Wealth, Matt Rinkey. Good to have you on the show, man.
Great to be here. Thanks, Craig.
A lot of activity in your world, I'm sure.
Oh, it's never ending.
Yeah, market off. All these triple-digit swings. I saw the movie The Reverend. Have you seen the movie The Reverend yet?
Haven't seen it yet. Nope.
Okay, so hopefully I don't ruin the movie for you. I'm sure everybody's talked to us by now, but there's a little bit of a bear attack in it. Maybe you've heard?
I have heard.
And I was watching, and I was like, man, that makes me feel like the market. The bears attacking. How do we fight off the bears to start off the year, Matt?
I mean, to fight off the bears is basically you got to have perspective. You got to understand that bears typically happen every few years on average, whether it's a bear market, which if you're hearing about it right now, that means a 20% decline in the stock market. And we're not even there yet. Right now we're at about 14% decline in the S&P 500 for the year. On average, that's what happens every single year. There's a decline of 14% each and every year. So people need to understand
So that even happens within the year. You see that trend. It doesn't mean there's necessarily a big correction or recession. So this is not abnormal.
Yeah, people need to know since 1980, the average intra-year decline is about 14.5%. So every year, there's going to be some type of decline of that amount. So people need to know that this is perfectly normal and par for the course. And despite the fact that there's always those declines, 3 out of every 4 years, even with them, the market ends up going up and ends up for the year. So you can't be shaken out at every little zig and zag in the market.
Well, it creates opportunities, though, doesn't it? I mean, even these dips in the market, they're a little scary at first, but there's opportunities in that.
Yeah, I would say the biggest opportunities are when the public, as a mass consensus, gets really freaked out. Because when everyone is sitting one way, like they're very scared, that creates the opportunity. It means no one's left to sell. And when that happens, usually you have strong returns going forward.
Don't you think it's more volatile now, though? It feels more volatile. I realize that there's always that potential opportunity for it to come back up and even finish the year on top, but you got to admit these triple-digit swings are a little intense, right? And you know, I was having a conversation with someone who does really, really well, much more vested in the market than I am, and he's telling me about all of the money that he's lost. And this is a guy who knows what he's doing, and even he was a little tensed up from it. So, I mean, the volatility is still at least a little nerve-wracking.
Yeah, so there wasn't a whole lot of volatility the past 5 years. We're starting to see that again. So it was an unusual 4 or 5 year period where there was not a lot of volatility. But now with the market having higher prices, when you're talking $16,000 Dow, you're going to see more point swings just because the indexes are higher. So, yeah, it's gotten a little bit more volatile, but in the context, it is completely normal to have a 14% decline. So, you know, you got to put it into that perspective.
So I always have to make sure that we focus on things you can control. Can't control the market. I think it's interesting, but to me, it's like checking a box score of a ball game every day, seeing what went up or down. But you can't make plans around the volatility of the marketplace. I mean, you can, but explain how a well-diversified portfolio can hedge against some of this craziness we're seing.
Yeah.
What are some of the things you can do today?
Yeah, so you can control the amount of risk that you're taking in your portfolio. A lot of people, they might look at their statements and think they're diversified, but they have all their money in the stock market.
Yeah.
And when that comes to be, you're going to have wild swings. You can have down 15, down 20, even down 40, as we've seen in the past. However, when you add some other conservative investments into your portfolio, perhaps bonds, over the last 65 years, there's never been a 5-year period where a portfolio with half stocks and half bonds has ever lost money. So people need to understand that by controlling your risk and not necessarily having all of your money in the U.S. stock market or all of your money in the foreign stock market, by adding some conservative investments or real estate, other assets to your portfolio, you likely, in a longer-term horizon, you're not going to be losing money unless you make some bad decisions and panic when the market goes down and wait to get back in.
Yeah, well, today's takeaway is be diversified. You're going to see volatility in this marketplace. We're going to be covering it every day on the American Dream, but let's focus on the things you can control. Matt Rinkey, a brilliant financial advisor. Love having you on the show. Thanks for this market update today. Appreciate it.
Thank you.
All right, so here's what we're going to do now. We're going to switch gears and we're going to get our Street Smart segment. We're bringing in Iran Sinai, the credit guy. This is a guy who helps you understand how to protect from identity theft and get the highest possible credit scores. Such an important topic. We're going to get Iran in here right now.